Hello everyone and welcome back. In today's video we will be discussing a new innovation ETF that challenged the king of ETF innovation, Cathie Wood's ARK investment. That ETF is Moon. If you like what you see here, please like and subscribe, and with that, let's get on with the video. Given the huge success of Cathie Wood's ARK investment, it's no surprise that other management firms are trying to replicate the winning formula. Thus, we have Moon ETF created by Direction. Now we're going to go ahead and dive into the Moon ETF technical analysis. There's not a whole lot to go off of right now because this came out around November 13th. So just by looking at it, you can see that it's on a tear. There's some dips, however, like it goes up, then small dip right there, up again, small dip, up, small dip, and then up. And if it continues the pattern, we'll see a small dip, and then it's just this kind of stairways up. But of course, doing technical analysis on this is difficult because there's not a whole lot of history to go off of like there is ARK and other ETFs. It's hard to determine points of support and resistance because it's just so new. However, like I said earlier, it's on a tear obviously, and we'll go over some of the holdings right now. So Moon has a total of 50 companies within the ETF. All of them are considered innovators. There are some ones that you will notice like NNDM or Nano Dimensions. I'm sure also many of you are familiar with Plug Power and Fuel Cell Energy and Microvision. However, those stocks I just named are not in the main ARK fund ARKK. However, Nano Dimension is in the ARK ETF. And you'll notice that the stocks that Moon holds are equally weighted. There's no top-heavy stock like there is in ARK. In ARK, you have 9% to Tesla and like 7% for Roku. However, you don't get this with the Moon ETF. They are more or less equally weighted. Another key difference between Moon and ARK: Moon has different sectors rolled into the ETF, such as information technology, healthcare, and industrials. It also has countries outside of the US, such as Israel. ARK has its own Israel ETF. Sub-themes: there's genetic engineering, cybersecurity, drones, 3D printing, robotics, software services, internet services and infrastructure within the Moon ETF. ARK, however, separates all these subsectors and whatnot, with ARK, then ARKQ for robotics, then ARKW for next generation internet, and then fintech, etc. And then we have, like I said earlier, they have their own print, and then Israel ETF. So ARK separates their different sectors, while Moon is rolled into one. However, one thing to take into account: Moon is not actively managed like ARK is. We've already talked about it being equally weighted. However, it is also reconstituted annually and rebalanced semi-annually. So it's very hands-off when compared to ARK. And some people like that, some people don't. The question is, do you want an ETF that is actively managed like ARK, or do you want one with good innovative companies that have more or less equal weight but are rarely touched? So do I think Moon is an ARK killer? No, and I think it's good having more innovative growth ETFs because, as you saw earlier, the holdings are different, as is their holding weight. This gives you the opportunity to be exposed to a greater number of innovation companies in an ETF, and you can implement different types of trading strategies for these ETFs. I will also go ahead and link the holdings of each ETF down below in the description, so you can go ahead and take a look at see what companies that both are holding. Well, that wraps up today's video. If you like what you see here, be sure to check out our other videos. Thank you, and until next time.